Bitcoin just did something it has never done during a market panic. And if you miss what this means, it could cost you everything. Drop a comment right now. Are you buying this dip or running for the exits? I want to know where your head's at. Bitcoin just did something it has never done during a market panic. And if you miss what this means, it could cost you everything. Drop a comment right now. Are you buying this dip or running for the exits? I want to know where your head's at. Here's what's happening right now, and I'm going to be straight with you. This is one of the most important market moments of the past 2 years. Oil just spiked over 18% in a single overnight session. The S&P futures are bleeding. Gold and silver, they're actually underperforming, which should terrify any gold bug watching right now. And in the middle of all this chaos, Bitcoin is quietly doing something that has historically preceded its biggest runs. I'm going to break down every major asset class, S&P, oil, gold, silver, and Bitcoin. Give you the exact levels that matter and tell you what I think happens next. Stay with me because the Bitcoin section is where it gets really interesting. Let's start with the damage report on the S&P. Futures are down hard, but here's the thing most people are completely missing. This breakdown didn't start tonight. Friday was the tell. When the S&P cracked below that major trend line on Friday and closed below it, that wasn't noise. That was the market whispering what Sunday night just screamed. Now we're looking at a clear downside target in the 55.30 to 55.50 range. That's where we have two converging pivot lows from late 2025. One from that massive red candle day in October, one from the reversal week in November. Those are real support floors with institutional memory baked in. But here's the more uncomfortable truth about the S&P right now. We were already in trouble before any of this Iran situation. Non-farm payrolls last Friday came in soft. That's your labor market flashing yellow. 2 Fridays before that, PPI data, producer prices, came in way hotter than expected. Then PCE inflation, also running hot. And all of those numbers, they were measured when oil was sitting around $65 to $70 a barrel. Now, oil is above $105. The inflation data that's coming over the next 90 days is going to look absolutely brutal, and the Fed, already boxed in, has 0 good moves left on the board. This isn't just a dip. This might be the beginning of a very ugly repricing. But before you close your brokerage app and go live off the grid, let me show you what oil is actually doing right now, because this chart is the key to everything. Oil hit $111 overnight, over 20% in a single session. That's a wartime spike. That's what fear looks like on a commodity chart. But watch what happened next. It's already pulling back. As of right now, we're down to the $105 to $106 range. Still up massive, but that initial panic buying is rolling over, and that matters. Here's a phrase that the best commodity traders live by. The best cure for high oil prices is high oil prices. What that means, the higher oil goes, the more it strangles economic demand, the more it brings itself back down. It's self-correcting, but brutally so. And here's the geopolitical wild card. The current U.S. administration has serious midterm pressure in November. Inflation is a political nightmare. The incentive to find some kind of diplomatic off-ramp with Iran, or at minimum to push oil back down through strategic reserves or back-channel deals, is enormous. That doesn't mean it happens fast, but it's a real force working against $110 oil sticking around. Short-term, oil is volatile and dangerous. I'd be extremely cautious chasing this move, but let's talk about the asset that's actually holding up the best through all of this. And no, it's not gold. Okay, this is the part of the video I've been building toward. Pay close attention. When the S&P futures opened tonight and started selling off hard, when oil was spiking and the whole market was in panic mode, where did Bitcoin go? Yeah, it pulled back. It always correlates with risk-off moves in the short term. But here's what almost nobody is talking about right now. Bitcoin is trading at roughly the same level it was a week ago. The S&P, lower than a week ago. Gold, lower than a week ago. Silver, lower. Oil, outside of this spike, has been volatile and uncertain. Bitcoin absorbed the shock and is basically flat on the week. That is a massive relative strength signal if you understand how to read it. Now, I know what the bears are screaming right now, and drop a comment if this is you. It's going to 35K. This whole thing is a trap. And look, I don't dismiss that. If we lose the key support level around $62,000, the chart opens up for a longer-term downside scenario. I won't pretend otherwise. But in the near term, this setup actually looks constructive. We have a defined support zone, we have relative outperformance against every major asset class right now, and historically, Bitcoin has shown a pattern of front-running recoveries when it holds strong during macro panic events. Here's what I'm watching. As long as Bitcoin holds above that 62K support zone and doesn't make a new lower low, this is a hold or an accumulation zone, not a panic sell. But the real tell will be what happens in the next 48 hours as the macro situation either escalates or finds some breathing room. If you're finding this breakdown useful, hit that like button right now. It seriously helps this channel push this kind of analysis to more people who need it. Now let's talk about the asset that's supposed to be the safe haven right now, gold. Think about this for a second. Oil is up 18%. There's a live military conflict in the Middle East. The stock market is cratering. Inflation is already running hot. By every historical playbook, gold should be surging right now. It's not, and that's one of the most important breadcrumbs in this entire analysis. When an asset fails to perform in the exact environment it was built for, that's a warning. Smart money is telling you something with that behavior. On the chart, gold just got smacked down right at a key resistance level. Now it's starting to form what looks like a bear flag, a pattern where the price bounces weakly before rolling over for another leg down. If that flag breaks, we're potentially looking at a retest of significantly lower levels. Silver is telling the same story. Rejected at resistance, now bear flagging. The short-term target zone in silver is a retest of that $70 to $71 area, with an even longer-term risk scenario pointing lower. I want to be clear, I'm a long-term gold bull. In a 3 to 5 year frame, the macro case for gold is as strong as it's ever been. But in the near term, these charts are waving red flags. So here's the uncomfortable question all of this raises. If gold is failing as a safe haven, oil is spiking on fear, the S&P is breaking down, and Bitcoin is relatively holding, what does that tell you about where the real perceived store of value is shifting? I'll let you sit with that one. Here's where we are, zoomed out. We have a market that was already weakening fundamentally before this weekend's events. The jobs data was soft, inflation was trending back up, the Fed has been paralyzed, and now we've layered a genuine geopolitical shock on top of all of that. The short-term path is going to be headline-driven. Any signal of de-escalation with Iran, any hint of a diplomatic opening, and you'll see a sharp risk-on bounce. That's real. Be prepared for it. But don't mistake a bounce for a reversal. The structural damage to the macro picture doesn't heal with one good headline. Stagflation, slow growth plus rising inflation, is a genuine scenario on the table right now, and markets are historically very bad at pricing that in quickly. What I'm personally watching this week, the S&P holding or breaking the 5,530 to 5,550 zone. Oil behavior around $100 to $105 and whether it stabilizes or keeps falling. Bitcoin's ability to defend 62K and any Fed language about inflation and rate policy. The next 48 to 72 hours are going to tell us a lot about which scenario we're actually in. Look, I know markets like this feel overwhelming. Everyone's got an opinion, everyone's got a prediction, and half of them are going to be completely wrong by Thursday. What matters is having a framework, knowing your levels, knowing what confirms your thesis and what invalidates it, and not letting emotion drive your decisions when the charts are screaming at you. That's what we do here, every single day. If you want to stay ahead of these moves, not react to them, subscribe right now. I drop market breakdowns like this every day before the opening bell. Hit the notification bell so you don't miss the next one. And seriously, go down to the comments and tell me, are you buying Bitcoin here or are you waiting for lower? I read every single comment and I'll personally reply to as many as I can. I'll see you in the next one. Stay sharp.